All right, how's it going, ladies and gents? I hope you're all doing well. What are we looking at here? Macro. Bang. So, I hope you all had a good week and are having a good weekend so far. In terms of trading, we had a decent week. We added some numbers to the accounts across the board. There were, so that's good. We had one mistake and one kind of scenario where we burnt our hands, which wasn't ideal, but it wasn't too detrimental, so it's okay, right? But without further ado, let's jump into so what we're covering here is yesterday's PA. So it's currently Saturday, we're covering Friday's PA. So what we're going to do is pull this back by 1 day and look at what, more or less build that context before we go into the intraday PA and analysis that we were dealt. So here I want you to understand, and I said this in the last video, how we were looking at price reacting from one of these two arrays, this one or this one, right? This one wasn't ideal because it was a discounted array and also it wasn't present on DXY, right? The DXY array, in fact, I don't know if it was, let me see, this was formed on the 3rd of March, 2nd of March, yeah. So that the bearish imbalance on EU would have formed here on DXY, and you can see we don't get that, it's actually closed. So that wasn't an ideal scenario to have, and that's why I didn't participate in the shorts here, and that's why I didn't participate in the shorts here. After that, as you guys know from the last video, I participated in the shorts on Thursday. On Thursday's close, we got another bearish imbalance, and the point I was making right before I went on that, whatever that was, tangent, is that we respect bearish arrays over here. We inject new liquidity and form new bearish arrays. Order flow is bearish, right? So now ideally what we usually look to do is use this array as an area where new bearish liquidity and offers can be injected into the market to push price lower. However, we haven't taken out any area of sell side liquidity yet. Normally we have to expand this range. That's how price works. It accepts this range, right? We go into this area of volume stability that we mentioned. Liquidity, volume and volatility will decrease and liquidity will move away from the market. Then we need to seek liquidity. If a large order hits the market in these conditions where volume and volatility are low or where liquidity is low, price needs to push out of this range and seek liquidity at more distal prices. And that's what we see going on here. So we need to see price at least take out this level and then potentially take out this level before seeing some kind of retracement to find new liquidity. The offer momentum most likely isn't exhausted just yet, right? It gets exhausted when we start transacting at cheap areas because sellers are no longer willing to sell at these cheap areas. Let that sink in. So we know that the daily direction, right? We have our draw on liquidity down here. Yeah, right there. And that's more or less where we want to trade towards on the day, right? Especially kind of trying to jump on the wave of this bearish momentum. So now dropping into the hourly, there wasn't much on the 4 hour. So we can go straight into the hourly and start to look at how that morning was panning out. So what we will do is keep that on here. Just bring that back so we don't cause any confusion later on, and then we can go to our micro chart. Get rid of this. Go down here. Right, so Friday opens up. We saw how that 10 p.m. candle looked, and in terms of narrative on the hourly, you can see we have bearish array, which price traded into, held that midpoint nicely, right? We tap into it once, twice, 3 times, and then displace lower, taking out the weak lows that were formed during Asia. Right, so taking out those lows, leaving behind another imbalance, which was very unlikely for price to revisit. We leave behind this area of sell side liquidity there. And then we play this forward and we see how price prints going into the next day. So Asia, very, low in volatility. We get this small little range. And then as Europe opens, you see we get these two imbalances which print, right? First one opens up here. And then the second one opens up here. So if we go M15 and pull that back a bit, just so we can see how it printed in live time and what we would have been looking for. And we will add on the higher time frame candles. Right, so if we pull that back ever so slightly. So we rock up to the charts, right? We get to 7 a.m., which is over here. Bang. And you see we get these two bearish imbalances which form that hourly imbalance there. And we get this one under here. And you see we don't even pull back into any of those, right? I don't think DXY even gave us any divergence. You see, we don't tap, maybe on this one, but there was no way we were going to get involved in that. So there was no opportunities here for us to get involved in. Price just dumps. And then if we pull up that area of sell side liquidity from our higher time frame, you can see we actually take it out. So bang, sell side liquidity on EU, it gets taken out. Let me just double check that's the right one. I think it is. Let me just put the other one on as well, just to double check. Yes, I'm sure we don't actually get to this level. No. So you see, we take out this area of sell side liquidity, the one that was printed on the 5th of November, right? This was printed on the 5th of November. And then if we go to DXY, you see that if we go to the 5th of November, which is, nope, this high here, right? So you can see we tapped it there. And then we got the divergence. But if we just take this right over, even if let's take this one because it's closer, right? And we go to M15. That M15 on DXY has not taken that high yet, right? So we've got negative divergence, meaning that DXY needs to take this high, or is most likely going to continue to move higher to take this high. So EU, I'm looking for lower prices, right? I'm looking for a correction of that divergence. So I'm expecting lower prices into that draw on liquidity. So going back to EU, right? Now this is where we started to get the hands burnt a little bit, because I saw this imbalance over here, right? Which lined up with this H1 imbalance. And I was starting to look for potential shorts here, right? As we took out that buy side liquidity and started to push back lower. DXY took out this low, right? And because we had more or less a shallow shift, I was happy to enter that just on the shift, cross-referencing DXY. And you can see I got nacked, bang, right? Unfortunate. And then the downfall, or the reason why that wasn't a good play, was because if you go to the hourly, in fact we can still do that on the M15, we can just pull this back a bit. Right, is that your dealing range on your M15 is from this high to this low. And this is the problem by just getting stuck on those lower time frames, that you miss that larger picture, right? And that's what I had done. You can see that your EQ lands over here, and this H1 imbalance is really what we should be looking at. So if we just adapt that, so this is now a H1 imbalance, just so you can see that. If I draw that across, you can see that lines up with that there. This is what we should have been looking for. This was just Too silly, right? And if you look at it, we have this bullish M15 imbalance below us, which price is holding. We never actually shift, we never induce that, and we obviously start to push higher. Now we tap into that. Now this is where our eyes should have started to look for these shorts, right? Because we get sell side liquidity down here, and it's a weak low. We haven't, grabbed liquidity beneath that. It's a single low, and then we get these low resistance levels all under here. So what do? We do the standard operation where we wait for a shift, right? And you can see that happen there. We get a shallow run on buy side liquidity, right? And in these plays where we get that shallow run, and you can see, look how nicely we tap into that H1, and look how nicely we hold that distal line of the one beneath it, right? Bang, look at that, nice, right? Very nice. So this was very nice to see. And then you see we get the shift. You don't even have to go into M5. That's your shift. And I put my sell limit just there. Stop going just above the high. Okay. And then we target these lows over here. And the mistake I made here, even though it's not really a mistake, it's just poor management. And yeah, is that I held the whole position to the bottom, right? You can see that we get that and price dumps, and eventually we take that out. Nice, so clean. And really, I should have been managing, I should have been taking positions out here. We don't have any hourly arrays. However, at areas like this, right, where we're sitting above that imbalance, there, I should have taken at least close to 60% or 50% of the position out there and let the rest run, especially on a Friday evening, right, or Friday late in the session coming into the end of New York or London close, right? So, but the main reason I didn't do that was because I just wanted to recoup the losses from here. So that's never a good phase to be in. You never want to be going into New York trying to recoup your losses from London. That's never a good mindset to have. Which is that's the lesson for the week, right? Don't get your hands burnt trying to play silly plays here, right? It's so silly, but it's okay, right? At least we managed to catch this. Very clear, very nice. Still up for the week, which is always good. I think I gave back around, about 0.6% for the week in this. Chop. Right, and as in at the end of all of this, right, on the day, I mean after this, I'd given back 0.6 from what I'd made here on the previous day, which I went through already, right? So ideally, if we just followed the rules, we wouldn't have got stung, because there's nothing here, there's nothing there, there's nothing to trade over here. And then, when it actually presents itself, it's so clear. When you find yourself trying to fight a position or fight your way into a position and squint your eyes and go into the chart through your face, that's when you know that something's not right. So yeah, but that's about it, guys. This was very nice, right? The one thing, and I've said it again, is that when you get these shallow runs on liquidity where price doesn't body close above, you can expect quite the aggressive move to the other end, because buyers are not able to hold price above here. The buyers are very weak, and sellers are pushing price back within this range, and you can take that shift entry, especially with such a nice risk to reward. Who could complain? A 1 to 2.39 on a Friday evening, completely changes the week. But yeah, guys, so like I said, very good week overall in terms of setups. This little thing here scuffed us up slightly, but it's all right. You always need that reminder, right? The equity curve is still starting to print that shape, so it's good. But yeah, I'm going to wrap it up there, guys. I hope you all enjoyed that. I hope you all enjoyed the videos that I dropped this week. And yeah, I will see you on Monday.